revise first our performance measurement chapter, and then we will proceed for our second chapter, which means second last chapter, budgetary control. Budgetary control has been reduced dramatically. All kind of numerical budget questions have been shifted from here to your intermediate, and we will understand about the budgetary control in just 15-20 minutes. It's very easy. You will say, sir, we feel blessed that ICI did such kind of changes. Anyhow, let us start understanding this concept. So you will say, sir, what is this performance management? What did you taught us in performance management? Please recall us. If you remember, initially we understood about responsibility centers, that there are certain kind of responsibility centers. First responsibility center is investment center. In investment center, the responsibility of the manager is to do everything. He is the one who is doing everything. He may be a manager for corporate office. He is responsible for everything, for cost, for profit, for revenue, for everything, because he need to answer his boss that what interest. Boss may be directly shareholders, maybe any other manager. He is answerable to someone that what returns are actually being generated for the money that has been invested. So that's why we call it as investment center. He or she generally appoints profit centers. Say regional offices are profit centers. Here objective is to maximize profit. Here objective of this manager is to maximize profit. He or she will try to maximize profit by any means, using any means. So obviously he or she will employ two kind of persons. One will be revenue center, another will be cost center. By revenue center we mean sales units. The sales units will have a target of maximizing their revenue irrespective of the cost that is incurred for advertisement, etc. Obviously it cannot be enormous cost, but the cost limit is not so high. We are focusing on cost. We are focusing on what? Revenue. And what is our cost center? It is production unit. You will say here our objective is to minimize cost. Here our objective is just to minimize cost, but because we are production unit, etc., where we are focusing on minimizing the cost. Then performance appraisal. I taught you that, see, there are two kind of organizational structures. One is departmental base. Here usually centralized departmental decision making is done. Means organization at the top level takes the decision. Okay. And second is decentralization. Means divisional performance structure. Here we give autonomy to our managers to take the decision. We want divisional managers to play autonomous roles for the benefit of for the welfare of their divisions as well as for the organization. So obviously divisions has autonomy. Here there are two kind of performance measurements. One is for divisional managers, another one is for divisional unit. It may be possible the divisional unit is earning losses, but divisional manager may have reduced such losses, so divisional manager's performance may be different from division's performance. For example, previously our loss was of 10 lakh, now it is of 6 lakh after introduction of new manager. So you will say the new manager is effective, although the division is still in loss. So you will say we shall obviously recognize the performance of divisional manager as separate than that of performance of divisional units. So our performance measurement criteria is dependent only on those factors that are directly affected by decisions of divisional manager. So we say controllable contribution or divisional contribution, controllable profit is the right criteria of fixing the responsibility of divisional manager. We decide, we analyze, we make performance measurement on the basis of divisional controllable profit or simply controllable contribution. If we talk about divisional performance, the units performance, we will say, sir, units performance is majorly dependent on, what? Divisional contribution. What is divisional contribution? Means we subtract out of controllable contribution, we subtract certain expenditures that are avoidable in nature and shall be levied on division. So, for example, if there is no division, such expenditure will not be there, but these expenditure are incurred by organization. You are saying that, for example, audit. If there is no division, audit will not be done. These expenditures are not controllable in department manager's hand, but obviously these are being incurred just because division is there. If division is not there, these expenditures will be avoidable in nature. So you are saying such kind of expenditures are subtracted, and then we arrive at divisional contribution, or we can say divisional contribution to corporate sustaining cost, and we will say this shall be the criteria of deciding the performance measurement for our divisional unit. Okay, if I am talking about what? Comparing two different organizations. Now what we do, we subtract even one more thing. We subtract one more thing, that is unavoidable expenditures that are incurred by organization. For example, we have an office space that was empty and we started a division over there. So you will say these kind of expenditures are unavoidable in nature. Office space, say depreciation, or office space, any expenditure, say property tax, this is unavoidable in nature. But you will say, sir, if the division has been operating separately, this cost would have been incurred by them. So obviously we shall take this one as well into consideration. While taking the decision, we shall also consider this kind of cost to compare it with other organizations. So these are the whole structure. Sales minus variable cost is equal to variable short-term contribution margin. If we subtract our controllable fixed cost, we will arrive at controllable contribution, and so on. Then we learnt about return on investment. Obviously, return on investment was creating dysfunctional behavior. What is return on investment? It is operating profit over average capital employed. Listen to me carefully. Operating profit over average capital employed. It was creating a dysfunctional behavior because in certain situations, there was a new project where we were earning more than the required rate of return, but because of such introduction, our company's total ROI weighted average ROI was reducing. So company may dislike it despite having higher ROI than required ROI. Company may disregard such project. So we said that we shall go ahead and we shall follow absolute value that will be calculated in residual income. Absolute value will tell us that whether there is any benefit or not. If there is any benefit, we shall obviously go ahead. This was the fund of residual income. So we are calculating absolute value. How we calculate it? Operating income minus return on required rate of return into investment. We arrive at residual value. Okay. So the only problem with these two was because they were dependent on accounting figures, which is very easy to manipulate. These were creating problem. Okay. Next we learnt about economic value added, EVA, and we understood that Stern Stewart and Company gave this EVA trademark formula, and we are supposed to use this formula. I'm not going to discuss this because I told you that this is to be dealt by our accounting and SFM teacher. You are supposed to use the formulas. I gave you certain adjustments. You are supposed to go through those adjustments only, and you shall follow those adjustments. I gave you certain reasonings behind the adjustments, and you are supposed to go through those adjustments. For detailed understanding, you need to go to accounts, because our study material is covering at a very very few lines are there for EVA, and only adjustment was done for interest. Nothing has been done apart from interest in our curriculum. So I am not going to teach you EVA again. I am not revising it. Okay, now comes after EVA. You will say we understood about non-financial factors. I told you there are certain terminologies such as vision, such as mission. Vision is what company wants to become in long term. It may be e-commerce giant, it can be anything. Mission is how we are going to reach there. What are we going to do that we will reach over there? There must be certain steps that we are going to take that will help us in reaching there. Then comes goals. You will say that we will set certain goals for our organization for this year, for certain years, so that we can achieve our mission. We will say that if these figures are met, if our revenue is met, if our this is met, if we become microprocessor leader, we will be able to achieve the first step of the mission that will help us in reaching the vision. Strategy. These are certain subjective concepts. So on certain occasions these terminologies are used interchangeably. So you shall not be worried that if you use goals and objectives interchangeably, what will happen? No, they are not so rigid terminologies. You shall not be worried about them. Strategy is how, if you are saying that we will become microprocessor leader, Intel is saying this, how they are going to approach them, how they are going to become microprocessor leader, what kind of tactics they are, what kind of strategies they are going to follow, whether they are going to have some tie-ups with certain good brands such as Dell, etc. Objectives, we will see that for example, we have a tie-up with HP, we are Intel. So we will see that obviously this much amount of sales shall increase because of this tie-up. So we set an objective that our this much amount shall increase because of this tie-up. This is objective, which is also known as CSF. And next, tactics. So you will say how we are going to achieve our objectives is our tactics. CSF is a kind of objective, and KPI is that how we are going to measure that whether we have achieved our objectives or not. Fine. So this was what we learned in non-financial factors. Then we understood about you kindly read SBA on your own. I have not covered it. Triple bottom line. There were three kinds of bottom lines: social, economic, and profit. Social, environmental, and economic. Social, environmental, and economic. Social means people. Environmental means planet, and economic means profit. Profit is here profit of whole community and not just of a particular organization. Here we are talking about whole community's profit and not just focusing on the organization profit. That's what I am saying. What's next? You will say balance scorecard, Kaplan and Norton gave us balance scorecard. And what did they explain about balance scorecard? See, there are 4 kind of perspective that we need to consider, take into our minds. First is financial, that what finance we shall get, because obviously shareholders are the one who are curious to know about finance. What are the measures we are thinking about increasing the financial perspective? It can be increase in revenue, it can be increase in sales, it can be net profit ratio, it can be anything that please our shareholder. How we are going to do that? We will definitely have to target about customer. We will say that our second most important perspective is customer. If customer is satisfied, we will get everything. So we need to think what customer expect from us, what customers see from us. It can be economical product, it can be best quality product, it can be faster delivery, it can be anything. So to do so, we will have to change our internal processes. So we will say internal business perspective. Process means what? Internal business process perspective means you are thinking about how to improve the our processes. For example, it may be increase in change in infrastructure. For example, you may bring certain new machine into consideration. You may change the process, the ways things are being done, so that things are being done swiftly and faster. There may be lack of coordination. You may try to resolve it so that our processes shall be improved. There can be certain changes that you can do so that our processes shall improve and our customer shall get satisfied. Obviously, if you want to change the processes, you need to give the right learning, you need to go for innovation, you need to go for training to our employees, and that thing is learning and growth. That was last perspective. If you draw this in a map, that what is to be done by what level, that is known as strategy mapping. Nothing else. Strategy map is about mapping the measures, etc., with respect to each perspective, that for what perspective what are our measures that shall be achieved. Then we went ahead and we did our next topic, performance pyramid. Performance pyramid was given by Lynch, and what did he said? He said that we are, just a second, I am coming on to that as well. Lynch said so this was given by Lynch and Cross. He said that our corporate vision shall be taken into consideration. What is our corporate vision? Whatever is corporate vision, we shall think that to achieve our corporate vision, what shall be the role of market and what shall be the role of finance. Means we shall have this much market share, we shall have this much expansion in market, etc. This is market. And what is finance? We shall have this much profit, we shall have this much share, etc. This is finance. Lynch and Cross said, if you really want to achieve the right market, you need to do certain changes. You need to concentrate on our satisfaction towards our customer if you really want to have good market. So if you want to satisfy your customer, you will say, obviously, to satisfy customer, we need good quality products, faster delivery. We need what? Good quality products and faster delivery. This is the two prerequisite things. This will satisfy customer and obviously our market will increase. If you want to have financial perspective into consideration, he is saying our measures shall be that our productivity shall improve. What do you mean by productive improvement? Our cycle time, manufacturing cycle time, throughput cycle time shall reduce. I taught you throughput cycle time in activity-based costing. I forgot to revise it because it was very simple. There was only one thing, process time, that was value added. Otherwise, everything else was non-value added. So we understood about cycle time. We need to reduce that cycle time and we need to eliminate the waste that we learnt in MUDAs. Last thing is flexibility. You learnt about flexibility. You understood that flexibility is dependent upon volume, it can be dependent upon specification, it can be anything. Means, for example, if I am as a customer approached you, I said that I want these many output, which is very high number, you shall be able to deliver me that. If I am saying that I want customization, you shall be able to do that. This is known as flexibility. Fine. Then comes next part was, next thing we learnt was Fitzgerald and Moon building block model. See, it was primarily dependent on two things, standards and rewards. These standards and rewards are meant for employees or labor, and third thing was dimensions. Dimensions was meant for organization. So if I talk about standards and rewards, because they help employee motivation, so you need to think first about standards and rewards. What is standard? They shall be equitable, means different organizations, different divisions having different workforce, having different work difficulties, rigor of work is different, shall have the standards set in a way that none of the employees shall feel that I am being oppressed and that one is given liberty. So standards are set in a way that nobody shall think that we are feeling oppressed. Achievable. You will say achievable means that you are saying that we shall be able to achieve something. Those standards shall be able to be achievable. It shall not be like we set ideal standards that are not achievable in nature. So obviously nobody will think that about those standards, and employees will not take care of them. They will think that these are unachievable standards, they are ideal in nature, they are something that we shall have ideally, but we cannot have in real world these kind of standards. And last is ownership. We are saying here that standards shall set with the discussion with our team. This we are going to learn today in participative budget, that our team shall participate, employees shall participate in setting the standards. Then they will feel ownership. They will think that okay, we have made these standards, so we need to, obviously, because now organization was asking us that what is the right standard for you, and we discussed the same, and as per our discussion these standards have been set. So it is now our duty to fulfill these standards. So they start taking ownership of the work. They think that okay, I need to do it by any means. This is my work, not organization work, and I need to fulfill it. Rewards. Three things are essential for rewards. You will say motivation. Motivation means rewards shall be set in a way that they shall motivate the employees. It shall not be that you set rewards that are unmotivating. You say that if you will achieve this thing, I will give you a pencil. Employee will say I don't need a pencil. Rewards shall be motivating one. Clear. Rewards shall be very clear, that people shall understand, okay, if we achieve this reward, if we will do this, if we will meet this target, we will achieve this we will get this reward. So they shall be clearly explained to our team. Third, controllable. We understood today about market size, market share variance, and we saw that market size is totally uncontrollable in nature. We cannot control it. So our rewards shall not be based on market size variance. They shall be based on market share variance. So something that is under our control shall be thought about, and we shall not think about the things that are not in our control. Okay. Then comes dimensions. Dimensions are divided into two parts. One is results, one is determinants. Results are determined by determinants. You will say, sir, what are determinants? You will say, sir, these are the main things that helps us in deciding the results. What can be the results? We want performance, financial performance, and comparative or competitive performance. We want to achieve good thing. We want to be good in definitely competition. So results, these will be dependent on what? These will be dependent on four things. Whether we are delivering quality, first thing. Second, whether we are utilizing our resource properly, whether we are doing proper innovation with the products, with the change in time, and whether we are flexible. Flexibility means whether we are giving what is required by the customer. The most important thing in building block model is that it is utilized in service sector and not in manufacturing sector. So few of students generally commit this error, that they take this model and try to utilize it in what? Our manufacturing model. Please make sure you do not utilize it in manufacturing model. Then comes Performance prism. A prism has several sides. We all know 5 sides are there, 5 facets are there. The first facet is, you will say, first facet is stakeholders satisfaction. What do you mean by stakeholders? This was given by Neely and Adams, and it was said that okay, there are several stakeholders and not just customers, or not just customers and shareholders. For example, employees are our stakeholders, government is our stakeholders, suppliers are our stakeholders. We need to think that we shall satisfy all of them. It is not like that we shall think only about shareholders. The problem with performance pyramid and balance scorecard was they were thinking only about stakeholders and customers. Here Neely and Adams said in performance prism that we shall think about everyone, because if others are dissatisfied, ultimately our business will collapse. So we shall think about stakeholder satisfaction, be it is our employees. For example, we may be very good towards our stakeholders, we are running good, but our employees are not satisfied. So what will happen? Our business will collapse. So our stakeholders satisfaction is very much required. So for doing the same, we need 3 things. We need to develop, we need to do what? We need to have strategies in place. We need to have strategies in place, that we need this strategy will help us in satisfying the stakeholder. Obviously we are making strategy, so certain changes may be required in processes, so we need right processes in place. If we are making changes in processes, it may be possible that we may not have the infrastructure required for such kind of processes. Our capabilities are falling short, so you will say we will require to expand our capabilities. So this is third thing. Fourth thing, capabilities. And last, we also expect something back from our stakeholder. For example, we understand in customer profitability analysis that certain customers may not be beneficial to us, so we shall say them no. They may be very big customers, but we shall say them no. So we shall see what our organization shall have from the stakeholder and whether they are providing us the same thing or not, and if they are not providing, we shall say them no. This was a very big chapter, so our revision has taken very long time. Benchmarking, I told you benchmarking I am not revising because it is just copying, it is just comparing yourself with other organizations or with other divisions of your organization, and we are just seeing that what improvements we are supposed to do in our organization. This is benchmarking. Last, not-for-profit sector. The major portion of not-for-profit sector was value for money framework, because not-for-profit sector was not running after profit. In certain situations there may be clashes for funding. In certain situations. Few may say that I want this much fund, few may say no, I want this much fund. Different departments may have clashing for funding because government is giving limited funds, so they may try to get maximum funds. Here objective is not to maximize our profit. Here objective may be to serve the maximum customers, whatever their needs are. For example, government hospital has a objective of maximizing our best treatment to patients. So value for money is that while such kind of organizations are there, we need to have 3 E's framework into place so that these organizations shall work best towards achieving their objectives, whatever their objectives are, because their objective is not to maximize the profit, their objective is to satisfy whatever the goals have been set by government. So government or any trust, etc. So first thing is economy. Here obviously we will say that we shall purchase goods in most economical manner. We shall purchase goods in most economical manner. The same thing shall be purchased at least cost. Second is efficiency. Second is efficiency. So you will say efficiency means efficiency means you will say, sir, by efficiency you are saying that input output ratio shall be best. Whatever we are inputting into the system, maximum output shall be there. Maximum. So things shall be utilized in best possible manner. Resources shall be utilized in best possible manner, and maximum output shall be there. This is most important criteria, so that our not-for-profit organization shall work in right direction. And last and most important, then that obviously we want economical things, we want efficiency, but we shall work towards objective. So meeting the objectives of the organization is effectiveness, that whether whatever we are doing is effective. We will call it effective only when we are meeting the objectives that are laid down by the government. So this was our chapter, and with this our revision is over.